all my El Paso lovers. Oftentimes you guys come to me with mortgage questions and I'm able to answer them for the most part, but I'm not licensed in mortgage lending. My license is in real estate. So just for you guys, I brought on a professional, one of the best mortgage lenders here in El Paso, Texas, to talk to you about what to expect when applying for a loan, to give you information about loans, and talk about rising interest rates. So here we have Priscilla Pettis with CMG Financial. I'm going to throw her number and her information up just here on the screen so you guys can contact her. She's going to talk to us about loans, what to expect from them, interest rates, because I want to provide you guys with the best possible resources when buying or selling a home here in El Paso, Texas. Priscilla, let's start from the very beginning before we get into the juicy stuff. What is the first step into buying a home?
Awesome. Well, thank you, Isaac, for having me here. Let's talk about what does it take to get pre-qualified. Step one is you need to get pre-qualified, because any realtor, or anytime you decide I want to buy a home and you want to talk to a realtor, the first thing the realtor is going to ask you is, have you been pre-qualified? So step one, find a lender that can help you get pre-qualified. Main step.
and the reason why a realtor is going to ask you, have you been pre-qualified, aside from some other questions of getting to know you, is because in order to find you a home, they need to know what your purchasing power is. So if you're not pre-qualified, then they're going to be throwing random darts at a wall with a blindfold on. So how does somebody get qualified for a loan?
So once you're in contact with a lender, the lender is going to ask that you submit an application. Once you submit that application, there's two big parts to that application. One is your credit and two is your income. We analyze the whole application as a whole and come to a determination of a qualification amount, or we determine there if more work needs to be done to get you all to a qualification.
So Priscilla, before we get into the next part, people always ask me, hey Isaac, how much do I need to make to qualify for this certain amount? Is that a question that you can answer, or you need to know all the factors involved with them?
Yeah, so specifically, everybody's situation is different. One person may qualify for more than the other. And again, that goes back to us reviewing the application as a whole, because when we pull your credit, we're going to see all the debts that you have. And then we're going to see the income, your monthly gross income. And then we put those factors together to come up with whatever your debt to income ratio is. The less debt that you have, the more you're going to qualify for. Again, specifically, some people have more debt and not enough income, and some people have a lot of debt and no income. So this is why every situation is very different, and it's really the reason why, if you're looking to buy a home, whether it's now, a few months, in a year, get with a lender to see where you're at. That way there's no surprises.
And do people ever come to you asking, hey Priscilla, can you tell me how much I qualify for, but I don't want my credit pulled just yet?
We can work rough numbers. I always tell my clients, if you don't want me to pull your credit, go to freeannualcreditreport.com and get your report. Every month they allow you to pull a free credit report, and that way you can see what debts are reporting off your credit report, because that is, as a lender, that is what we go off of. We go off of debts on your credit report. So not anything that's not reporting your credit report, like utilities or a phone bill, things like that. We are specifically just going off of what's on your credit report. So yeah, we can definitely run rough numbers before running any credit.
Cool, perfect. Now let's talk about the three main loans: VA, conventional, and FHA, the pros and cons between them. And let's go ahead and start with FHA. What are the pros to FHA?
So FHA is a government loan, and the government has really strived to make a loan out there to help people get into homes. So on an FHA loan, you are going to see that you can get into an FHA loan with as low as a 580 credit score. So definitely, that's a good thing to help buyers get into homes. A minimum down payment for an FHA loan is 3.5%. So it is on the lower end of down payment amount. The con of an FHA loan is that loan will carry mortgage insurance for the life of the loan. Okay, so you will be paying that. There also is an upfront fee that FHA charges to use their loan. However, that fee is rolled into the loan. So it's not something you're having to pay out of pocket, but it does get rolled into the loan. And it's 1.75% of your sales price that gets rolled back into the loan.
And can you choose to pay it out of pocket?
You can. Okay. So if you decide you don't want that on your loan amount, yes, you can pay that out of pocket.
Perfect. And right now you mentioned that PMI stays on your FHA loan for the life of the loan. How do they get rid of it? Would the only option be refinancing?
Yes. So FHA does have an option that if you give down at least 10%, then it will come off on the 11th year. But in most cases, people going in an FHA loan don't give 10% down. So in that instance, you will carry mortgage insurance for the life of the loan until either one, the loan is paid off, or two, like you said, you refinance into a conventional loan, or you get out of that current loan.
Let's talk about a loan that kind of goes hand in hand with FHA, VA loans. What's your opinion on it? What are the pros and cons?
VA is an amazing loan. So pro of that loan is that it's 100% financing, so no down payment required on that loan. Also, there's no mortgage insurance on that loan, so it's one of the best loans out there. The con is that you have to have the entitlement to be able to use that loan, which means that you either have to be a veteran on active duty or have in some way served in the military to have received that VA entitlement to be able to use that loan. Again, the government has done a good job in helping our veterans get into homes without any down payment. You can also be a surviving spouse.
Perfect. A problem right now in the market that we're in is that appraisers are taking so long to get the appraisals out, so it's extending the closing date on a home. How is the VA with appraisals?
So that has recently changed. As of a few months ago, VA did change the amount, the appraisal fee amount charged for a VA appraisal. So it's one flat fee, it's $800. So every veteran pays the same amount for an appraisal. But because of what was happening during COVID and the crazy market that was going on, the appraisal turn times, were getting into 30 to 45 to some 60 days. And so, it was really hard for sellers to want to accept a VA offer knowing what was going on with the appraisals. However, that has completely changed, like I said, in the last few months since they updated this fee. The market has now stabilized, and so now the turn times that we're seeing on VA are back to normal, even quicker at some points, because just in the last month or so, and the ones that I've been doing, a VA is assigning them quickly to the appraisers. The appraisers are really doing a good job in getting out there and getting those appraisals back to us. So now I would say, if you're a seller and you see those VA offers come across you, you can accept them with confidence, knowing that VA has really changed the game and those appraisals are now coming in a timely manner, and we are now meeting our contract dates.
Perfect. On the flip side, conventional.
Okay, so conventional, also a really good loan. Pros to that loan is that the mortgage insurance falls off of that loan, okay? So there's a few different ways. The mortgage insurance will fall off once you have 20% equity into that home, okay? Also, or if you give 20% down, you automatically are wiping off the mortgage insurance right off the bat, okay? Let's say you don't want to give 20%, but you don't want to have mortgage insurance. There is a way that you can buy it out. It's called a PMI buyout. Con to the conventional loan, I wouldn't say so much that it's a con, but you do have to have a higher and better credit profile as a whole in order to get qualified for a conventional loan. So, and it's also a little more restrictive on their guidelines, and the debt to income is also capped at 50%, whereas on an FHA and a VA loan, you can push those limits. So, you're passing your debt to income for a conventional. This is where we move people into FHA loans. But again, it's a great loan, just requires a little bit of a higher credit profile as a whole to get into that.
Perfect. And are there any other forms of conventional loans that can help first-time home buyers or people with a lower down payment?
Yes. So if you are a first-time home buyer, the conventional does have a 3% down program. So that's actually the lowest down payment out of all of them, except for the 100% financing through VA. But FHA is 3.5%. But if you are a first-time home buyer and we can get you qualified into a conventional loan, there is a 3% program, which is amazing, so that you're not struggling to come up with such a large down payment. 20% down is definitely a pro to that.
Okay, perfect. And the advantage to that 3% conventional over the FHA is that once you hit that 20% equity, it'll automatically drop off when you request it. Opposed to FHA, you have to refinance into a conventional unless you put 10% down, correct?
Correct, yeah. So most definitely, yeah, you'll see that mortgage insurance come off on your conventional loan.
Perfect. Now, for the investors out there that are looking to move down here to El Paso, buy an investment property, or just buy a long-distance investment property in El Paso, what are the options for them? FHA, VA, conventional?
In terms of buying an investment property, the only route to go within those three loans is a conventional loan. Okay, so investment properties do require anywhere from 15 to 25% down. And I say that because it depends on the type of property that you're buying. One units can be a minimum as of 15%, but once you start getting into multi-unit properties, then the down payment requirements do go up. So anywhere from 15 to 25% is what you're looking to put down using a conventional loan. However, this is why it's very important to speak to your lender, because there are proprietary programs to specific lenders that are made just for investment properties that are outside of your realm of FHA, VA, and conventional, in other words. So You're not going through a traditional mortgage. There are other avenues that are less restrictive in documentation that you have to provide that works very well for investors because most of the investors that you meet have already a portfolio of properties that they own. When trying to qualify them traditionally, it's much different. So we have these other avenues that we can use specifically for investors. So super important. Get with your lender. Call me because I do have avenues to these.
And what's one of the avenues that you use for investors?
We have a program. It's specified to investors. It's a no income and no employment verification, no documentation needed on the loan. Basically, where the approval of the loan comes from the cash flow of the property. So when the appraiser does his market rent schedule, on that, if the cash flow of the property is there, that is really the qualification. So for investors that are looking to buy multiple properties, this is such a great avenue to put them in because they can buy multiple properties. There's no restrictions as to how many properties they can buy. As long as they have their down payment for the loan, it's a very easy qualification.
Perfect. And Priscilla, what is something that you think investors should take into account when buying an investment property with these regular conventional loans? Because I know that interest rates can kind of be higher for them sometimes, and considering that interest rates are going up.
So really with these two avenues that we have, again, interest rates for investments are always higher regardless, just because it's not a primary. So you're typically going to see that interest rates on investments are always typically higher. But as far as interest rate wise goes from going one route to another, they're going to be kind of right on par of each other. There's not going to be a huge difference in the fluctuation of rates. Again, with rates increasing right now, we've seen them go up, but are they crazy? No, they're still well within good rates for purchasing an investment. Yes, we're still at historic low rates, whether you're buying primary or you're buying investment. So definitely a good time to buy either way.
And on that topic, let's get into the juicy stuff. Why do you think, in your personal opinion, that interest rates are going up?
The $1,000,000 question, right? Why are rates going up? Okay, well, there's a lot of different factors as to why are rates going up. One is, of course, everything that's going on in the economy right now. We're now coming out of COVID. Right now we have a crisis in Ukraine and Russia. So that all plays into effect of rates. Second is the unemployment rate also has a big factor as far as how the Federal Reserve determines rates. When you look at what the Federal Reserve is saying, because of inflation and everything going on, they're already talking about doing rate increases throughout the year. The Federal Reserve just met in January, and in that meeting, they did not hike rates. However, if you've been listening to the news, there are talks that they are meeting this month in March, and they already are talking about an increase. What that increase is going to be, we don't know. We can speculate. They've been saying it could be 50 basis points, it could be 100. However, we do know that it's coming, and they may not do it all at once. Remember, they have meetings throughout the year, but I would say that we can expect one this coming month. However, I don't want to deter people from buying a home because rates are increasing, because like we just said, rates are still at all-time historic lows. I actually have a link that I believe I sent you that hopefully we can post to this video. It's a link of rates over the last 30 years, okay? And it's gonna show you what rates have been. And when you put that in comparison to where we're at now, guys, it's still an amazing time to buy. Please don't let rates deter you from buying.
Perfect, and I'm gonna put that link in the description. How do you think that these rising interest rates are going to affect the market though?
Okay, so the way it'll affect the market is, one, you already have prices increasing on homes, right? So prices of homes have gone up. Two, rates are increasing. So what does that mean? That means that now mortgage payments are going to be a little bit higher. So what will happen is some borrowers will be affected because they will not as qualify for as much as they did before with the lower prices of homes and interest rates. So some buyers will get affected, and it may throw them out of qualification, or it may lower their qualification. But what I believe this is going to do to the market is we're going to see a little bit of a stabilization. Right now, the inventory is low. So right now you have people fighting over homes because, there's not enough inventory. What I think will happen is because of this, hopefully, it will allow the market to stabilize, and it will allow for more inventory to now be available.
Now, I'm going to ask you one final question, and we don't have a magic ball to tell the future, but I would like to ask you this question. What do you speculate, in your personal opinion, rates being at by the end of 2022?
Oh, so that's a good question. Of course, as a loan officer, I would love to say that they are going to stay low. I would love to give good news to everybody, but again, like you said, we don't have a magic ball in our hands right now. But What I can say is just because of those points that we spoke about earlier, we are in a rate increasing environment. So right now we are expected to see them go up. How much? I don't know. It can be anywhere from 50 to 100 basis points, just being on what the Federal Reserve is saying. But let's go back to March of 2020 when COVID hit. Did anybody expect that to hit?
Nobody.
Absolutely not. So what happened at that time? Rates went down. So there's no magic ball to tell the future. So it's really hard to say because anything can happen at any moment that can cause them to rise or go down. But what I can say is for the current time ahead, when the Fed meets this month, I would just say let's watch to see what they say, how much they increase, and then just go from there.
All right, Priscilla, and one last question I want to ask you. This is actually kind of specific to one of my viewers, but what is your opinion for buyers looking to buy a home that have all their money in physical assets opposed to their bank account?
We need to make sure that the source of your funds is legitimate. So typically what we like to see is we like to see your money already in your account seasoned for 60 days. 60 days prior to closing.
All right, El Paso, that's all for today. I hope we provided you with as much of valuable information as possible. If you're looking to buy a home down here in El Paso, Texas, do not hesitate to reach out to myself or Priscilla. We would love to answer questions for you guys and possibly get you into a home. And if you like content like this, subscribe and turn on the bell. That way you can stay informed on the El Paso market.